Welcome to the exciting world of investing. Before you even think about buying stocks, you gotta know yourself. Are you a risk taker, or do you prefer playing it safe? This is crucial, folks. Your risk tolerance will determine what kind of investor you are. Are you looking for quick profits, or are you in it for the long haul? This is not a casino. This is about building wealth. Once you understand your risk appetite, you can start thinking about your investment goals. What are you saving for? Retirement? A down payment on a house? Having clear goals will help you stay focused and make smart investment decisions. Remember, investing is a marathon, not a sprint. Let's talk dividends, people. Imagine owning a piece of a company that's making money hand over fist. Wouldn't you want a cut of those profits? That's what a dividend is. A share of the company's earnings paid out to you, the shareholder. Think of it like this. You buy a slice of apple pie, that's your stock. As the bakery, the company, sells more pies, they share some of the profits with you. Sweet deal, right? Dividends are usually paid out quarterly, but some companies pay them monthly or even annually. The amount you receive depends on how many shares you own and the company's dividend policy. Dividends are a great way to generate passive income and watch your money grow over time. It's like getting paid to own a piece of the action. Alright, now that you understand the basics, let's talk about where you can actually buy and sell stocks. These days there are tons of online brokerage platforms available, each with its own set of features and fees. Don't get overwhelmed. For beginners, I recommend starting with a platform that's user-friendly and has a good reputation. In the US, some popular options include Fidelity, Schwab, and Vanguard. These platforms offer a wide range of investment options and educational resources to help you get started. For my British investors, Hargreaves Lansdown and AJ Bell are excellent choices. They provide access to both UK and international markets, giving you more choices for your portfolio. Section 4. Stocks or funds. Where to begin? Now for the big question, individual stocks or investment funds. Buying individual stocks is like betting on a single horse in a race. You need to do your research and pick the winners. It can be risky, but it also offers the potential for high rewards. On the other hand, investment funds are like betting on the entire field. These funds pool money from multiple investors to buy a diversified portfolio of stocks or bonds. This spreads out your risk and makes it easier to manage your investments. So, which one is right for you? If you're just starting out, I recommend going with investment funds. They're a great way to diversify your portfolio and reduce your risk. We'll dive deeper into the exciting world of successful investment funds in our next video. Disclaimer. I am not a financial advisor. This content is for informational and educational purposes only and should not be considered investment advice. Investing involves risk, and you could lose money. Always do your own research before making any investment decisions.